All right, so hello and welcome everyone. Doug here with the LincolnList.com. Let me welcome you to another edition of Stock Market Mutterings. This is where I will do my best to take a grope in the murkiness here, try to give you clarity and make sense out of this market, help you with direction, provide you with some quality trade setups, and I hope that helps you make a little bit of money. This will be for the week that begins on the 2nd, and this will be, without a doubt, the most important trading week of the year. As you know, we have a very important election coming up here tomorrow on Tuesday. All eyes are going to be on that. And based on the outcome, we're going to get a little bit more clarity as how this market is going to trade and what policies will be in effect from now until the end of the year. And the thing is, you can see the importance of this event coming up because of the way the market is reacting, something that we haven't really seen much of lately. I know when you look at the chart itself over here, you see a sell-off, and we have had a pretty good sell-off and a couple of really strong sell days. But what you're absent here of is panic. Now, normally when an event comes by, it happens very similar to what we had in September. You're just getting a melt-up market. Things seem good. Corona crash was the same way. This event comes by, and it just creates this panic situation where the market just takes a 2-day, 3-day sell and ask questions later sort of stance. Everybody just sells and asks questions later. Now that's an emotional event. That's based on just fear, and everybody wants out. And like I said, they're going to just sell positions and ask questions later. Coronavirus originally created that issue because nobody knew what it was going to do, the impact it was going to have on finances. They just wanted out of everything, no questions asked. You kind of saw that same thing in September. Now, what does that really mean? It just means it's an emotional event. And usually when people calm down after a few days, they end up buying their positions back, which has happened in most situations. Actually, every situation, if you think about it, every dip buy in history has worked. It just depends on when it decides to work. Why I'm bringing this up is what you've seen here is about a 14-day skid on the market, but it has been a different type. There hasn't really been any panic in the market. Now, yes, we've had a couple of big 700-800 point down days in the Dow or something like that, but it's kind of been methodical. So when you see something like this, and why I'm pointing this out, where the differences might be here, is that when you see something like this, absence of panic, that doesn't necessarily mean that there isn't, that it's mass selling. It's just there's an absence of buyers. And that kind of makes sense as we're approaching a significant election. It's highlighting to you how important this election or the outcome of this election is, or the indecision going into the election, because it's telling you that nobody's really wanting to put any money to work. And that makes complete sense. Based on our climate here, we've got COVID problems. We've got all kinds of other problems here that we need to address with growth, employment, and such. So there's more indecision in this market than there actually is selling, even though the chart reflects some of that. So I want you to kind of pay attention to the differences there. Usually panic sells can be retraced quickly. These more of indecisive things takes time to figure themselves out, which we may see some clarity on that going forward. Now, when you just look at it from a technical perspective, we are down here at what I would consider a buy point in this market because you have tapped the support from the 23rd very close to the 200-day, this is the EMA, and then here's the 200-day SMA. It's pretty close to these levels, and I would expect that you would just from technical, if you're just trading on technicals, you're probably more inclined to get a bounce in this area. And if you look through the big name charts, you're going to see most of them kind of look like this. Just about everybody's been going through some sort of a fade. So I don't think you can just dive in and start putting money to work with an election showing up here tomorrow. I don't see how that could be a good idea. Maybe long term, if you're an investor, it's fine. But if you're a short-term trader, I think you have some issues with that. So it's kind of untrusting here a little bit with this. So I think in a case like this, the technicals take a back seat to the actual political and social climate that the market is going through. Which brings me to the way we're looking at right now as I'm doing this. One of the rare times I actually do it on a Monday morning versus on a Sunday. The futures are gapped up pretty good. Here's the SPY. And again, I'm trying to ask myself this question. Why would, if you were all indecisive last week and the market was just selling off last week, if nobody wanted stocks on Friday, why in the hell do you want them on Monday? How will this gap hold up going into an election when the same indecision, the same COVID problems, excessive lockdowns, all this stuff was there over the weekend? It was there on Friday. It was a concern on Friday. How come it's not a concern now? So I would be concerned about the quality and the legitimacy of this gap. So that's kind of where I'm going to go with this morning, looking at these and just kind of questioning as to whether or not this gap is going to hold and you're going to start to see a move up. Only time will tell. I don't know, but I would be very interested to see how this thing plays out. So that's my thoughts there. And another issue here that shows you this is the Qs. I mean, this was the leader of the pack for sure, was the Qs. And last week we had just about every major tech name like Facebook, Apple, Google, Amazon. Everybody was reporting earnings. And what you really saw there was just an overall lack of interest in buying. Like the big funds just don't want to put any money out there right now. And that's understandable. Again, we may see more clarity on that as the week goes. So really, I think a lot of things hedge here on Tuesday. That's going to be a very important day. Wednesday, we'll really probably button a lot of things up from it. Same thing though, technically. Now, when I want to transfer this over to some stock names, there are a couple of stocks that have, this could be a great opportunity to pick up some names that you missed out on maybe the last time or didn't maximize. There's also a couple of stocks that are bucking the trend. The first one I want to talk about here is one I've had a position in for a while, but I tell you what, I just don't have enough. And I'm actually looking to increase my position size on this and something. And this is this NEO. I mean, this thing is just unstoppable. And if you remember the webinar I did a while back, the state of the market in 2020, one of the things I talked about, there's always a handful of stocks that go from single digits over 100, 200, $300 every year, like GoPro, Rare Earths, all these other things. And we've had those. We've had Docu, we've had ZM, and one that I've had for a long time as well that I just sold, Peloton. I've been talking about that one forever. Here's a handful of those. You could see how they play out. NEO might be another one. I understand the back and forth, the sector and all that stuff here, but this thing it's had relative strength. When market's getting sold off and being pushed down, NEO's still finding a way to go up. It's still gapping up. Now, I wouldn't chase this stock here, and I'm not necessarily looking at this as a day trade for my day trading friends out there. I'm going to move this over to where the swing traders are. This is going to be a $50 stock. What's my basis on that? I've seen 1,000 of these charts. I know how these things play out just by being exposed to the market for 2 decades. I would say chances are 70% or higher that this thing actually hits $50 in the near future. And I'd like to position myself a little heavier on that, either via options or the stock. I've had some since 13, but I don't have enough here. And I think this is one of those next real big movers. It's got all the recipe, all the indicators are pointing to that. Doesn't mean it's going to happen, but I think you have an above average chance here, one of the better chances that you're going to get. And as the market's been selling off, this has actually been getting stronger. Do not chase it here. I don't think 32 right now is the best place that you can get. Look for some pullbacks to build a position. Now, that also brings me back to my favorite stock of the year, which is Peloton. I got into this thing at $25. Just sold it last week in the 130s. I mean, this is one of the biggest per share gainers I've had in years. And I think this recent pullback is going to be an opportunity to get into it. Trouble I would have with investing into Peloton here is that you've got some earnings coming up. If you want to hold this for a time horizon of 6 months to a year, then maybe that's not so important. But in this case, I think this is a good one. Unlike NEO, I think this is a better day trader stock because you have a lot of intraday action and you have a lot of areas where dips get bought in this, such as a good washout here on Friday, followed by a bounce. You've had some strong washout on Thursday, followed by a bounce. It normally has its bounces picked up pretty good, so this makes a great intraday trading stock. So my 2 favorite really is Neon. I just made that up. There's no such thing as Neon. NEO, which I think is a longer term play here. I think this is something that we need to be looking at 50. And who knows? Market's been stupid before. It could easily go to 100. So I'm looking at that one, number 1, to try to build a bigger position. And the next is obviously I'd like to get back into Peloton. And it's tricky because if it starts bouncing here, I still don't want it. I kind of wanted to wait for earnings, and that's on the 5th. So it could be a good week. Maybe, they sell off a little bit more for earnings. It'll be a good chance to get back into it. For the rest of them, you have this. It may be, once this election is over, you have selling across the board with some big FANG names. You have the Facebooks that have sold off, the Apple, which was just running relentlessly there for a long time, selling off a little bit more, Microsoft pulling back. I mean, all of these big tech names really went through pullback, and they're down enough right now where you don't have to be the first person to buy them. There's some significant upward momentum when the market decides to finally correct itself, wash out its problems, and start going back. But I think in order for us to think that way, and what I'm really trying to point out here, before we can think like that, we need some more data. To me, it's just senseless if you're a shorter term momentum trader and you're trying to put some money in your pocket. It just seems senseless to pick up these stocks on these massive gap ups going into an election. It just seems dumb. And right now, I think the best way to do this is you got to have a short-term vision until Tuesday is over. And then Wednesday, we can kind of reassess things. And I don't think it's so much of the outcome of the election as much as the chosen leader of the country, how they will approach the big problem, and that is COVID, getting a handle on this disease, getting people back to work, stopping with the lockdowns. As you know, I did the happy hour about how these lockdowns could be a significant problem. It's something that we have to look at. And I think that's more important than actually who gets elected is how are you going to handle COVID? So again, we're going to find out. But until then, this is going to be the most important days. I would say Monday, Tuesday, get there aggressive with scalps. I just don't think you cannot chase anything in this market. I would not chase this gap up. Maybe it goes higher, but risk to reward is terrible here. It's a bad idea. And I honestly don't see how this is going to hold up. I might be wrong, but I don't know why you would do this and screw up Friday. It just doesn't make any sense whatsoever, but sometimes the market's good for that. So keep it short, keep NEO, keep Peloton on there for great trades. I think they're the best. The other ones, the BABAs, the Facebooks, Apple, I think there's going to be opportunities there as well. So guys, I hope you enjoyed this. Trade safe. I look forward to hearing from you down there in the comments section. Trade well. We'll talk here in the next few days. As always, if you need my help, reach out to me, support@thelincolnlist.com. Until next time, see you then.